So despite muted results in the last 12 months, equity investors have over the long term still been rewarded, but there is some talk now that perhaps this recent volatility signals the end of a good period. Do we think this is true? What do we think the recent volatility suggests about our longer term view for equities?
Michael, actually the recent volatility we've seen is in line with the long-term average for equity markets. Over the past few years, the equity markets in particular have been very tranquil relative to history. So now we're seeing volatility of returns kind of come back up to historical averages, taking a lot of investors by surprise because they were used to having calm returns and also earning a pretty stellar result. What that means going forward is that there's going to be continued pressure, and to earn that equity risk premium, and it is a risk premium, it's not guaranteed, investors are going to have to stay disciplined and stay invested because it's only on a long-term basis that you capture that premium over other asset classes. Now, what this means for our outlook, over the next 10 years we see global equities for Australian investors might return somewhere in the 4.5% to 6.5% basis. That's pretty low relative just to history, but even to our own forecasts. And that reflects this volatility environment, but also that entry prices are still a little bit elevated for investors. So it's just being conscious of that risk that equities just have inherent to them. And that's always been there. We've just been pretty lucky in having a pretty peaceful market environment.
Given this outlook, what are the implications for investors as they make portfolio construction decisions at the moment?
This is, Michael, when having a plan really comes in handy, because investors with a plan are probably looking through these moments in the market and saying, you know what, I knew this was going to happen. Maybe they're doing some strategic rebalancing, or rebalancing is part of an annual plan. And for financial advisors, having that conversation with clients and saying, look, we knew these kinds of things can happen with investing. It's a risky game, and not all the days are going to be good days, but we just need to stay focused on that. Now, for every investor, whether you're working with an advisor or you're doing it yourself, asset allocation is the biggest thing that you can bring to establishing that kind of balance and being focused. So having the mix of stocks and bonds right, you can really align your time profile, your risk profile, and what you think your spending needs are going to be in the future. Having that mix of stocks and bonds can take care of a lot of things for you.
Thanks so much for sharing your insights.
Great. Thank you.